All right, good morning, everyone. The market just got kicked off about an hour ago. We're going to go through the stock market, use technical analysis to try to find some trade ideas and what's coming next. Leave me a thumbs up, and if you're interested in learning this skill set, take my course. Link is in the description below. All right, it's in the video link description below. Okay, moving on. So Qs. We'll start out here with big tech. So we're moving higher today. So as of right now, here's what I got. We've got this downtrend line right here that we were recently in. We hit our support that we called out on this channel, 297 area. You know, I was looking anywhere, I think it was about 298 down to 297. But in that area, I was looking for support to be hit. We bounced off that support, and we've been moving higher ever since we hit that first kind of major support. That major support, if you look at the daily, comes all the way back from here. We held support. You know, this was resistance there, and then once we broke above, it was support there, and so we came down, bounced off that support. That's what makes sense. That's where the buyers were sitting at, and you can see the volume, the big buying volume right there when we hit that support. So the buyers were there buying it up. Now, what are we doing? Well, we're moving higher, and we've broken out of this downtrend, and now we're currently moving higher. So I would say at this moment, you know, it's pretty obvious, I think, at this point, but it looks like we're going to run up and do a gap fill up at 330. So you have a gap. I have it circled right here. You have a gap that started off this downtrend, running up, do a gap fill, maybe pop it slightly. This is kind of the area where I think that this rally that the tech sector's been in will likely fade or you know, end. This is an objective area to short, basically, up here at 330. Even though, you know, the market will feel bullish because everything will be rallying, or at least tech will be rallying, this is your area where it's the most, you know, where it's objective. It could go higher, of course. We could even run up and do a full back test of this downward trend line off the March 2020 lows. See it right there? We could do a full back test. Obviously, that's way up there. So the way I'm going to play it likely is I'll look to probably reshort here at the gap fill with the stop, you know, kind of slightly above. You got to give it a little bit of wiggle room in case they just pop it a little bit. But I'll set that stop slightly above, and that's the trade idea. You know, you keep your losses small, and shorting at that gap fill makes sense. SPY kind of popping up today, just moving above this blue trend line, which is kind of major resistance. We've done it before. I mean, it's normal to kind of pop it a little bit when you're hanging out around this trend line. You can see right here we popped above it. There we popped above it. So it's normal to see that. And I believe even in the past, we probably popped above it just briefly right there as well. The blue trend line is your major resistance line. So that's going to come all the way back from your 2009 lows. This is a weekly chart we're looking at now. 2009 lows, walking up, held support all through here, broke support. Once support breaks, it becomes resistance. So we hit resistance, failed, and we're at resistance again right there, popping it briefly. But again, it's normal to see, you know, a slight move above it. Watch for how this behaves. You know, if we're gonna move a little bit higher, do we impulsively fail? That's something to watch. That would be a sign that would let you know that likely that was the top of the market. Yeah, so watch for that. And one thing to point out, the Fed's going to report tomorrow. So I'm not really, all the moves today, take with a grain of salt. You know, there's a couple moves that are happening today, but the Fed's coming out tomorrow, and I think there's the potential for some fireworks in this Fed meeting. So I'm a little hesitant to take breakdowns or breakouts today, right before the Fed. That's a high-risk move. IWM's kind of breaking down. This one's looking a little interesting, actually, for, you know, a breakdown. I'm still waiting for a break of this trend line right here. This trend line is held support several times. Here it is right there. You can see on the hourly chart, held support. Yeah, pretty much held support right there. And then we broke here, and it recovered it. So that's a bear trap. And so I'm waiting for another break. You get a nice impulsive breakdown of this trend line again. It's likely going to be the real deal. that could come on the Fed. You know, we don't have it yet, so I just don't think there's a trade there yet, but I'm keeping a close eye on it. The long bonds really doing nothing. We're just kind of hanging down in this range, lower. So rates are still rates are still elevated, coming down a little bit today, but nothing crazy. And so we can talk about the Fed real quick. The Fed, the market wants the Fed to buy the long bonds. That's what the market wants. It wants it to offer some relief on the interest rates, the 10-year Treasury. And so the Fed, in order to do that, needs to announce either yield curve control is one way to call it. Although they're not going to call it that. They're not going to call it yield curve control. They'll call it some lending facility program. But ultimately what it is they'll be buying longer duration bonds, 10 and 30-year bonds. So listen for that. Any kind of hint that they're going to buy those bonds, then the market most likely will at least tech will really like that, and that's what might cause that gap fill on tech. So watch for that. The financials will hate that because the financials have been rallying on the interest rate. So let's look at the financials. We do have a breakdown today. You can see here we have this trend line that we've been kind of walking up. Now, if you want to give it the kind of the benefit of the doubt, you can just drag this trend line down to these data points. And I think that makes sense given that the Fed's coming out tomorrow, not to jump in too early. So I'm going to do that. I'll just drag that down. You can adjust trend lines as they go. Now, there's only 2 data points, but given that the Fed's coming out tomorrow, I think we're likely, going to get, some sort of firework tomorrow in the XLF. So no trade here. I just, I can't recommend anything, but I'm not taking a trade on this one, right before the Fed. And as you can see, all the things are rallying today. That's basically what this rally is most likely about. You can see the Qs is up 1.5%. And if I go to the equal weighted Qs, we'll see if these things are rallying. These are up about 1%. So tech is rallying a little bit today. Again, it's right before the Fed, so I would prefer to wait. But for the most part, it's Qs, it's the FANG stocks that are rallying this market. But they haven't really done anything. They're just kind of sideways still. Nothing's technically changing. Their posture's not really changing. See Google up 2%. It's just still sideways. So again, if you went long every single 2% move in this sideways move, you're going to just get chopped you're just going to get chopped up. You take a move here, you lose. You take a move here, you lose. You take the move. You can see that every move up, you just end up. They just fade it. So we'll look for more. More trending action on that one. And oil is breaking down today as well. It's interesting to see that oil and financials are breaking down right before the Fed. But you can see XLE down another 2.75% today. And the XOP is breaking down as well. So there's a sell signal on the XOP. So you've got clear sell signals on the oil sector, XOP and XLE. It's just the fact that it's right before the Fed just worries me. But again, that is a sell signal. So clear breakdown of that trend. First line of support I see is down here. It's not the cleanest line. We probably can adjust this slightly. Right to about there. I'd say about 81, 84. First level of support. And you got some support right here as well. Right there. Let's check the daily just to confirm that. Yeah, so there's some support right there, 71.11. That looks like some support, 75.67, and yeah, 81.80. So things to watch on XOP because that is a sell signal. But again, if you're going to take that sell signal, you got to take it right before the Fed's about to shake the market up, most likely. Now, if the Fed does nothing, if the Fed does not buy the long bond or announce anything and they just decide to do nothing, they'll look for continuation of the current trend, which is tech selling off. Interest rates will continue to rise. And, I think the market's is going to stumble if the Fed does nothing in this meeting. I think the S&P is likely to start to stumble as well. So something to look for. The way that I'll be playing it is if the Fed does nothing, I'll likely short tech. And if the Fed does do something, well, if the Fed does yield curve control in any way or shape or form, then the gold miners, the play that I've been talking about, should do well. We can look at those real quick. Here, well, let's look at gold. There's gold bullion. Kind of, it's up today. So financials down, gold up, tech is rallying. The market thinks the Fed's going to do something. That's what it's saying today. The market thinks the Fed is going to implement some sort of rate control program. All right, that's what the market is saying today. Doesn't mean they will, but the people are betting on that. And so gold's up, and we'll look at these miners. They're all kind of down a little bit, at least this morning. Nothing major though. Here's like WPM. This is the one that talked about. Look, a little bit of a pullback, but this is not breaking the trend. The trend's still up on this thing as far as I can see. So little pullback, and I think we continue to rally. Whether that's today, I don't know. We could pull all the way back to support, 37.20. Anytime you run down to that support, that's an objective area to potentially add to a long position. But I still see this looking good to the upside. Like Newmont Mining's flat. It's just kind of flagging right now, bull flagging. Let's try to look at some of these. Where's Barrick Gold? Here's Barrick Gold. Again, Barrick Gold, actually, I didn't notice this, but except for this morning, you have this downtrend line in Barrick Gold right here. And this created a bullish falling wedge. We broke to the lower range of a bullish falling wedge. This is a low probability area. When you have a bullish pattern like a bullish falling wedge and you break down, it's often a stop raid or some sort of some sort of accumulation pattern where the institutions are buying it down here. But when we did that, we had do we have bullish divergence? So let's look. Yeah, we started to build bullish divergence right down here. So that was a divergent low. And so far, we've rallied right to the top of that trend line of that bullish falling wedge, and actually broke. Now it's not impulsive, so I think we're gonna have to wait till the Fed. But depending on what the Fed says or does, this has the potential to break out, or obviously break back down within the wedge. All right, so it could go either way, and again, that's how it goes when you have to wait for a Fed meeting. The market likes to get. The market likes to move into setups and then wait for some sort of event. It does that a lot of the time, especially with the Fed. And make no mistake, this market is controlled by the Fed. All right, this market rallies on the Fed stimulus and falls on Fed tightening, and that's basically what this entire bull market has been about. So that's what we have to wait for. If I had to, I'm betting that gold rallies. Here's Riot. So Riot is it's Riot blockchain. So it's a stock, but it's basically a Bitcoin proxy. So if you're interested in trading Bitcoin, this is one way to do it. And you can see it's basically getting rejected so far today, right there at that gap fill of 64.81. That was the area of major resistance. They popped it a little bit, but now we're starting to roll over. So again, that's the area of resistance. I think it's likely we're going to reject here and head lower. Do we have negative divergence? Let's take a look. We do not. So again, this is one of, that is resistance, but it's not the best setup. It's probably why I haven't really talked about it too much, but that's a potential trade idea. Again, right before the Fed, everything has the potential to really move, and there's a lot of potential for kind of fake out moves today. And kind of whipsaws. So take everything with a grain of salt. Here's APPS right there at support. They recovered this trend line. This is your trend line off your April 2020 lows, and it's been in an uptrend ever since. We broke, so there's a sell signal, and we're back testing. And as you can see, moving in, they've recovered the trend line, but it's not an impulsive recovery. There's no ability to really lift off of this trend line as of right now. So I think it's a good probability No guarantee, but I think it's a good probability that this is just meant to make it look like it's going to recover, but we're actually going to fail, and this is just one big back test. All right, and if it does fail, then look for it to head down to this support of 65. We get down there, I think it's very, we'll probably stop there, but I don't think we're going to stop there for long. I think we'll break, reject, break and head lower down to 42, about $42. So that's what I'd look for, is a break, a breakdown. If we don't get that breakdown and tech rallies, then obviously this is going to rally up. So it's undecided right now. I don't think it's something you can take a trade on at the moment, but we have to. The Fed will likely move this thing one way or the other. AMD here rallying today. So as of right now, they've made this thing look like a like a bear trap. I'm going to stick with this short just till the Fed's out of the way. We'll see what happens after that. If the Fed rallies tech and this continues to rally, I'll just bail from it. But again, this has the potential just to be a fake out and a whipsaw. So I'm going to go ahead and give this one a little extra room and see how the Fed reports. NEO just kind of hanging in there. It's range bound, top of the range 48.28, bottom of the range $40. That's range bound. ZG, you can see it's just struggling right here at that resistance 159. They keep popping it above, but it's not going anywhere. It just pops above intraday and then just is still back down in that area. So that's proving to be resistance so far. I think there's a very high probability that's going to hold as resistance. Qualcomm looks like it's going to rally up to resistance 141.75. That's and then next level of support is this gap fill right there at 130, 129.35. I'm not in this one anymore. I covered that at that gap fill. Carvana, just again makes it look like a bear trap at this moment because it broke down and has recovered. So we'll see. I got to give that one a little room as well. DraftKings this is a divergent high. I have it circled up here. This is a divergent high where we made a new slightly higher high and yet it did it on less momentum. See how the momentum is less there and there? So there's a high probability that this is where DraftKings, this is the end of the rally in DraftKings and it's likely going to roll over. And if it does, I expect it to run all the way down to this 45, 42 area. All right. What I'd wait for likely is a breakdown of the 64, call it 65, an impulsive break is 65, and that most likely will set us in motion down to this 40, 46 or whatever. Here's one, Chewy. Again, you broke. Here's your trend line on the daily. See, we were just walking up that trend line. We broke trend, and we're back testing, and we're not, this. I think there's a high probability that will reject here, and it's going to likely come in the form of, well, with the Fed reporting tomorrow, that it's likely going to come when the Fed reports. So they'll report, and then this thing's going to pick a direction. So this is either a bear trap or a back test. I suspect that it is a back test. The reason why I think that is you look at the negative divergences that are in play right here with no sign of a reversal from this sell-off. So this big sell-off, there was no sign, no technical sign that there was going to be a reversal just randomly right here. So as far as I can tell, it's a break and a back test. And I think we continue to roll over. The Fed will likely set that in motion. Redfin, again, you can see Redfin's just trading right there at resistance. So nothing's changed. We're, likely going to get rejected here. But again, until you see some sort of rejection, you don't know. Now, obviously, if you wanted to take a shot, this is all these resistance levels that I'm pointing out. These are objective areas to short. All right, doesn't mean they're going to work out, and it's higher risk because of the Fed reporting tomorrow. But it's objective. It's a low risk objective area. It's logical basically to short at resistance, and that's kind of where we're at on many of these. So just want to point that out. Depending on kind of each individual's risk tolerance, Snap is near resistance. Snap did kind of, that's pretty much a bear trap in Snap. It broke down one day and then recovered and has rallied pretty much every day since. So no breakdown there. I would just wait on that one. I'd wait for a break of this trend line right here. Here's TAN trading right at resistance, right there, 97.63, and again another objective area to short. Doesn't mean it's going to work out, but you're trading right, short it at resistance, go long at support. It's kind of the basics there. Okay, so that's all I got. I've kind of covered the scenario of what might happen with the Fed and potentially how to play that. Again, if the Fed announces a long duration bond buying program, or if they hint at it that they're going to buy 10-year treasuries, 30 years, the long duration, or they do some operation twist, or where they sell the short end and buy the long end, any buying of the long end, basically. I don't really care how they buy it. It's just any buying of the long end. Look for banks to sell off. Small caps will likely sell off as well. The IWM will likely sell off because there's a lot of banks, regional banks and whatnot in the IWM. So look for the IWM to actually sell off pretty impulsively, and then look for tech to rally. There might be this rotation where large cap tech rallies, and then the small caps and banks sell off. So look for that. And then gold will probably sell off in that scenario as well, because gold will not like to see. Oh no, excuse me. Gold will likely rally if the interest rates are being bought. So as interest rates fall, which is what this bond buying program would do, then gold likes that. Gold likes real low interest rates and negative real interest rates. If inflation's running higher than what the interest rates are paying out, that's the best for gold. So look for gold to rally and gold miners to rally pretty impulsively if the Fed announces a bond buying program to buy those longer duration bonds. If they do nothing, they announce nothing, they don't hint at anything, then I would look for large cap tech to continue to sell off. Gold could sell off, and but then large cap tech will likely sell off. And I would probably look for the SPY, the S&P 500, to start to sell off as well, because that means that the tech is likely going to make its next leg lower, and I don't see the SPY holding up if tech's going to start making lower lows. So that's how you play it. That's what I'll be watching for, and I'll catch you guys on the next video.